All right, this is going to be a weekly recap from the 18th to the 22nd, and I had a total of 7 trades. And before I begin, this is officially the first week, at least after this day, that I will be trading a $15 risk level. I have been trading a $10 risk level for a very long time, and that has been very small position sizes. And it feels like at this point I am doing better trading to whatever my dollar risk level is. I feel like I'm choosing the right setups. I think after 500 trades, at least that's what I have recorded on Profitly, which is even the first set of trades that I did in the very beginning of my journey back in 2015. I think at this point, I could totally be wrong, but I think at this point I can move up, and because of how I've been trading, move from a $10 to a $15 risk level, which is a lot in terms of percentage, but also absolutely not much in terms of dollar amounts. And if I can do good this week, if I feel like I'm on the right track and I'm still continuing forward, then I will move it up to $20, 25, and then maybe 30, and then continue to grow from that point forward. And yeah, that's pretty much the case. I already have it set in place so that, for example, if I want to buy a stock, right, it's already at 1,500 shares, which is a $15 risk level. In most situations, if I were to trade, I believe a stock over 10 cents, and I'll probably link or maybe add in the description of the video. It just gives a general idea on how I calculate my dollar risk level in terms of how many shares I should trade according to what that dollar risk level is. But I had a total of 7 trades, which isn't that much because there was actually a day that I did not trade anything, which was right here on the Wednesday. 5 green trades, good winning percentage. I only had one that didn't work out, and I didn't include it in my stats, this trade right here, because it didn't, do anything. It was a break-even trade, as well as this one, even though I made a very tiny penny. This was basically a break-even trade. The stats are pretty nice, and this could be something that I can add a 0 to except for this section right here, but my average dollar gain was $3. My average dollar loss was 54 cents. My average percent gain, which is nice. I've, really happy to see something that large, 3%. And that's been something I've been trying to improve. Much better than my average percent loss, which again is based off of one trade. So obviously, it might look a little too perfect because, this one red trade right here did not work out and I lost a very tiny amount. And it was also a listed stock. My average dollar gain position size was much larger than my average dollar loss position size because Netflix is a high priced, super high priced NASDAQ stock and it doesn't move very much. So I ended up trading what was still not even a $5 risk level, which is what I should have been doing. Yet ends up with a $400 position, which is fine. My average time in a trade that worked, or at least that I ended up being profitable, was 1 minute, and my average time again for this one trade was 5 minutes. I made $13 with $1,300 of dollar volume, which is really good because if you take into consideration, I had these two NASDAQ stocks that are super overpriced. This one's 200 and this one's 400. Right? If I were to take out $600, right, that would be a lot better, in terms of what did I make in terms of percentage off of the amount of dollar volume that I traded. So yeah, that's pretty good. And yeah, let's go ahead and go over the setups. Again, it's not very many, and yeah, I look forward to it. Even if it doesn't work out well this week, I'm gonna try trading a $15 risk level. And yeah, let's go over these trades right here. All right, let's look at the first trade, which is PDPG, which was a very long description, breakout with multi-day breakout in mind. Let's look at PDPG for the 18th. And I do feel a little bit weird because I just had some Hooters and I feel pretty bloated, but I'm pretty sure I can get through this. At least I'll try with one take. This was the day right here, the 18th, and this was a very low flow OTC. As you can see, it went from the 2 cent level, and it did get as high as the 78 level. So 2 to 7 cents is something very big in terms of percent difference, not necessarily monetary difference, of course, but this thing offers a lot of range, and The worry I had with this one, which it ended up being, is those type of stocks, those OTCs that just have a quick spike and then it goes all the way back. And this one was a previous day, not too long ago. It went from this two level as high as the sevens, and you can see it sold off the next 2 days. So with that in mind, I was very cautious with the way I traded this one, but I did see the opportunity. I was in at 1037 at 67. 1037 was right here, I believe. Yeah, 67. So why did I get in here? As you can see, this was resistance 67. It didn't break past it here. It struggled here. It didn't do it. And when I got in at 1037, it looked like it was going to do it. And it was going to break this important level. And not just this important level, but as you can see, the top of this candle, it was around that 70 level. So I thought it could break 67, and then it can try to break 70, and then it can do maybe a continuation. As you can see, the high here is 78, which was the previous high this morning, or at least on this day. And that was a setup, and that's why I was in it. I did get out at 1039 at 71 right here. At the time, I didn't feel too good with my sell, but I wanted this to be a breakout, and it was breaking out and uptrending. But when it got all crazy and it shot as high as 77, that made me very interested in getting out because it just shot up like crazy, and I wanted to sell into that. And it made me feel like it just blew all its momentum in just one candle. I would have liked it if it was uptrending slowly, but that wasn't the case here, which is why I got out. It did sell off. My worries were true with this one at least, and it did get as low as the 4 level, so I'm glad I sold when I did. And yeah, it would have been nicer if maybe I had to sell at a higher price, but I'm very happy that I sold when I did there. Nice percent gain. I didn't make very much because this was such a wide low flow OTC that I had to trade a small position size because I had a very wide risk level. But in theory, this was pretty good for what this was. Let's look at the next trade, which is NWBO, and this is a morning multi-day breakout. Let's look at NWBO for the 19th. The 19th is right here. And I believe the important level with this stock is the $1 level. As you can see, it was resistance here, and it kind of came back, and it had this wick. Let's look at the 19th. Right about there. Actually, just a few more right there. I was in at 931 at 98.99. So let's just say 99 at 931. Right here at 931. This, I'll probably have to zoom in more. This crazy candle right here is when I got in at 99 basically, which was the very bottom of the wick. And the thing I had in mind was that this thing was, potentially looking like it was going to make a move and break the $1 level, especially with this nice run up I had recently. As you can see, it shot up to 103, and very similar to that other stock, PDPG, I believe is how you pronounce it. Yeah, that was it, PDPG. If it just has a sketchy freaking spike like this with a wick, I'm very interested in selling. This was another example of me wanting to be in a setup that will gradually uptrend and break the $1 level and slowly continue forward. Instead, what I did was offer this very volatile candle, and I sold, I believe, yeah, the same minute, almost 932 at 99.67. So I didn't sell at the best point, but I did sell at least, right? It would have been ideal if I sold much higher, but I remember, and if you go back to the video that I published on this day, the 19th, only a few prints actually got as high as 103. Most of the trading action was right here, and I didn't like it. How there was so much dumping, and I didn't like how it just, didn't try to do something gradual, and it just started trading with madness. You can see the volume here is pretty huge. Just a few more candles later, and it went back to the 98 level, and yeah, that was about it for this one. It pretty much did not do that well, and that was a good trade for what that was. And I did trade a $10 risk level. Didn't make very much here either because it was another example of something that was very volatile, and I had a very wide risk level. Let's look at ENZZ, which was a late morning panic bounce play for the 19th. So let's look at ENZC. Right here is the 19th. Not a very significant chart in terms of something that's uptrending, but I did have an interest in this one. I believe because it was playing off of the, I think this one is the one that was playing off of the 6 cent level, which was pretty important because I believe if I were to zoom out, I would show it a lot better, but this one looks kind of weird. But as you can see, it was a level right here, the 6 cent level, where it held right here, and this was like the lowest point for the entire year. And when it was downtrending and it got to that level, I was interested in it for that reason, even though it wasn't like a nice uptrending OTC chart pattern. But this was something that was playing off of the year low, and I thought it could be a nice morning panic bounce play, or at least some kind of a reversal setup to play. Let's bring this back right here to the 19th. Right about there. I was in at 10.05.6. So 10.05 is when I got in right here, 10.05 at 6. And why? It had the morning panic bounce play. I was interested in trading it back here because I thought it might drop to the 6 cent level. And then, it's going to hold support and make a move towards the upside, and VWAP would be right here. But there were too many sellers at the ask. And what it ended up doing was break down actually and make a new year low, and maybe longer than a year, but at least that's what it shows on the yearly chart. And it started to work its way up. It almost looks like a ascending triangle. And when I got in, it looked like it was going to break now what is resistance, the 6 cent level, and make a move towards the upside. I got out at 10.08 at 613. So right here, 613 was right here. And why did I sell? Because it just shot up in the air. The other two trades were just crazy spikes. And then this one just literally jumped in the air. It went past VWAP, which was my goal. Obviously, if this was a slower uptrend, I would have been happier with it, even though this is also nice. I just want to get better at holding positions for longer periods of time, at least if it's working out. I'm not saying I want to hold on to a position that's a loser. Definitely don't want to do that. I've made that mistake before, but yeah, that was a sell right here at 613. It did get a little higher, 621, but I'm overall happy with my sell here. This was just one that jumped on the air, and it wasn't like, a regular uptrending pattern. It did ultimately, downtrend, and I could have maybe have taken a buy here when it makes the move and it comes back to the level now support before resistance, and it made a move again. But as you can see by how long these candles are, it kind of didn't have that consistency anymore. This was a pretty nice uptrend towards the rest of the day, and maybe that's something I could have thought in terms of a long-term setup, or at least long-term as in not in the same 30 minutes, but something that takes longer, because this was pretty cool how it did break that year low level of 6 cents, and then it tried to come back, and that was pretty cool. It did downtrend more, but it did get to 64, so that would have been kind of cool. Maybe I could try something like that, but this was a setup that worked out, and I also traded according to my $10 risk level, which is good. I did have these two trades. These were the worst of trades. Netflix is a high price to listed stock, not an OTC, not something I do my best. I didn't even trade my, $5 risk level for this type of setup. So I will stick to likely a $5 risk level with listed setups, but I will definitely move up to 15 with OTCs. And these were the two trades that I didn't trade according to my dollar risk level, which prevented this from being 100, but yeah, that's fine. At least it wasn't like an OTC setup. Let's look at Netflix, and as you can see, it was the same setup. I traded both times on 2 different days. Inverse head and shoulders head. Let's look at Netflix for the 21st. The 21st is right here. Yeah, pretty significant downtrend. I did see a very nice move on the 20th. On the day I didn't trade, but it was just something I don't have that much experience with, at least compared to OTCs, but Yeah, if you look at the video made on the 20th, if I see something like this again, a gap down warning pending balance play on a listed stock, a high priced real company listed stock, I'll be very interested in trading that. Let's look at the 21st, which was this day back here. Very volatile, at least chart wise. Price wise, it doesn't move very much. I was in at 1002, 218.16. So 1002 was way back here. Let me zoom in a bit more. 1002 was right here at what was it, 218.16, I believe. So I was in it right here. And why did I decide to trade this? I thought this was the head of an inverse head and shoulder. So the idea was that it downtrended, shoulder, spikes, here's the head, and then I'm in at 1002, and then best case scenario, you know, it makes the shoulder, right? It uptrends, and then I sell into that, and downtrends, and then it makes the shoulder. But as you can see, what happened was is that this was a shoulder. This was a very long head, which is not ideal. I never really made a shoulder unless you count this, but if you Google search in inverse head and shoulders, the shoulders are never supposed to be below the head. So this pattern did not work out at all. Again, I thought this was a shoulder. I'm in the head. It uptrends, I sell. Downtrends makes the shoulder higher than the head. And then I could trade it again. VWAP is the goal, obviously. With this type of setup, at least that's how I trade them. I didn't mean to sound arrogant with that, but I did get out the next 2 minutes at 218.17. So I made, wow, I made 1 penny from this trade. Yeah. 1004 was right here when I got out. And why I didn't like it. I thought it was going to do it immediately when I got in. I like being in a setup right before it works out, as you saw with ENZC. And this one just downtrended a little more. And, you know, I didn't like how the shoulder was just 2 candles long. And then the head was just looking way too long. So I got out and I did sell for a petty profit of 1 penny. And it didn't work out ultimately. But that was a good attempt for what that was, and it was a break-even trade ultimately. Let's look at LCOP, which is a high day breakout on the 21st. 21st is right here. Not the best uptrending stock setup, but this is the way LCOP trades. And this one was very strong. It went from the 78, so penny level, as high as 1 penny, and it even broke out this range right here. Super impressive stock. I did miss a few setups with it because I hesitated, but this one was super nice. The 21st is right here. I do regret missing this high day breakout right here, but it wasn't the best looking thing. And then this thing looks like a bull flag, as you can see, here to here, and then it makes the bull flag. I wanted to be a part of this trade too, but I wanted it to go down to VWAP or maybe slightly above it one more time. But it made an uptrend, and I understood the fact that maybe it was trying to hold this 1 cent level. If you're not familiar with the setup, you can look up a bull flag, and this was a pretty clean looking one for what it was. I hesitated the breakout here. I hesitated with this one, which pains me more because I could have maybe in theory have recognized the pattern sooner and traded perhaps when it was around VWAP at this sub penny 98 level. It did get as high as this 1 cent and 15 level, which is a nice percent gain. Let's look at the trade I had, which is at 1023 at 108. 1023, I mean, is right here. 108. Why did I get in? It was breaking out of this range of 107 and 108. This is when I got in. And the ideal level was that it was trying to break this 109 level and maybe continue forward and do something very nice. And it did uptrend a little bit, but it didn't do that much more. And yeah, let's look at my sell. I got out the next minute at 11.5. I believe that's, yeah, 11.45 at 1024. So I got out right here between this 11.4 and 11.5 level, which was at the very top. I did sell in 2 pieces here. Again, I was in here at 108, It did break out. It didn't have to work, of course, and I would have lost obviously, but this one did work, and I did sell near the top. It just didn't really uptrend that much more. But it could have been, something pretty nice. And in theory, even though I'm trading the high day breakout, somebody like me, if I was looking at this pattern sooner, could have been long in the sub penny 97 level. And when you take that into consideration, maybe that's a pretty good amount. And, I was not really in it at the most ideal time, but it did offer two setups. Again, the bull flag right here and the high day breakout. I traded the high day breakout. It didn't seem like it was going to do much more because I believe it had a lot of sellers at the ask. And yeah, that was a pretty good sell for what it was. And I did try to be patient with this one, trying to make more money off of it. And then I sold in two pieces. But when I sold one piece and then it wasn't looking too strong, I sold the other piece. That was pretty good for what that was, definitely. Let's look at the next trade, which is IGEX, another high day breakout setup, and this one kind of worked. So let's look at IGEX for the 22nd. Right here. So yeah, not bad because it's an uptrending stock, right? In the downtrends, and it looks like maybe the first green day, and they can try to uptrend for more time periods. Not just one green day, but maybe multiple days, and that was the last trading day of the week. I will be looking at IGEX, but this one kind of doesn't trade with the best volume at times. But let's look at the last day here, the 22nd. I was in at 936.70. So right here is when I got in at 936. And it looks like it was trying to break the 70 level. It did try briefly and it got to 71. With this attempt right here rejected. So now we're having more candles. And I like how I had a low here, then a new low right here. And it looked like it was building up, right? That it could break the 70 level, which it did do. But it didn't get that much higher. It got to 73 and it sold off. I could have traded the dip under VWAP here if I guess was more aggressive. But this is something I'll look forward to in the future. A dip towards VWAP setup on the first green day after a downtrend on an OTC that is relatively up and can continue the uptrend for a longer period of time. Let's look at my sell. Yeah, 938 at 70. So right here is when I sold. It did break 70 and get the 71, but I didn't like the price action. It was looking kind of sketchy, and I got out for break even for that reason. But in theory, it did get as high as 73. Maybe if I was a little more patient, I could have made more, but as you can see, it didn't really move that much. And I kind of saw that maybe it wasn't going to work that well when I at least remember how other high day breakout setups work compared to this one. Although, again, it did work in that it didn't just fall off a cliff and fail, but it didn't, uptrend that much. Let's see what a sell at 73 would have been anyway. I wouldn't have been bad. And I also had a really wide risk level. I shouldn't have had something that wide because of how scared I was with the setup, but in theory, I did try a $10 risk level. Let's look at the last trade, which was my only red trade, and it was another break-even trade trying the same setup with Netflix. Let's look at the 22nd of April for Netflix. Right here, the second red day, as you can see, it didn't do very much. Same setup as the other day. I said I was super wrong on this one. You can see how this one really downtrended. I was in at 1057, 219. 1057, which was way back here, 1057. As you can see, I was trading this at 219. It got as low as 210. And let me zoom in a bit more, but just keep in mind this one really sold off. I guess I can still keep the bottom right there. I was in right here, 1057. I believe 219.10 is when I got in right here. And why? Same idea. I thought this could be the shoulder. Here's the head uptrends, I do a nice sell. Maybe it even gets to VWAP or above it. Downtrends, I'll be in for the shoulder again. Ideal level will be breaking VWAP and seeing how it trades from that point onwards on the day that it could potentially maybe try to reverse, especially after having a gap down. But this one did not work. And I also had in mind that, because it did this right here, it failed, right? Something that just keeps making these downtrending slopes is less likely going to make an inverse head and shoulders. But I did like how it made a head and shoulders here, shoulder, head, shoulder. So I thought maybe it could be more likely the type of stock that would do it. And it didn't really work out, and which is fine. I got out 1102, and that was an average of 218.83. In theory, I sold in two pieces, but let's look at 1102. Big surprise, I got out when it broke the bottom of what was supposed to be the head of an inverse head and shoulders. And again, I was out at, what was it? 218.83. Yeah, so I got out like right here, my average, but what happened is that I was in a position and it wasn't looking that nice. I thought it was going to be a lot stronger, but it didn't break my risk level. So what I did was that I sold one of the two shares while it was still uptrending, so that if it fails, at least I'm not cutting the trade on a complete breakdown, or at least I don't have to cut losses with my entire position size. And I did get out the other piece somewhere around this 218.52 level, perhaps, when it broke the head of the potential inverse head and shoulders, making the setup a failure right there. But this was a pretty good in terms of discipline and trading, but in terms of setup, it really wasn't that nice, especially again because it was on this downtrending price action movements, and it didn't have to turn around. So yeah, that was it. That's it for this week. And also, I do want to note, even though I said here that I traded, well, in terms of did I trade good or bad, I put a yes. All 7 of the trades, I still got an 89, which is a B. For me to get like an A plus or something, I would have had to have had some trades that I would consider to be really good in terms of I traded it perfectly. There's always room for improvement, but for an example, if I had that, a 2 and a 5 right here, as you can see, that brings it much closer to an A plus. I just wanted to note that piece right there. That's about it. Clearly, I do better trading with OTCs compared to listed stocks, or at least looking at this data right here. I'm gonna do $15 risk level with listed, not listed, but OTC setups, and $5 I'll probably stick to that with listed stocks. I think I got the framework done. I could totally be wrong. I might have maybe a black swan or whatever. That's totally fine. Knock on wood, right? I continue forward, but I just feel like I have the framework in mind, and I'm gonna try trading much larger size. If you got any questions, if you're still watching this, thank you, and you can leave a comment below, and I'll try to get back to you. That's all I have for this weekly recap right here. Wish me good luck.